Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend, Thomas Parilla, president of Parilla Investment Group. Welcome back, sir.
Hey, thanks for having me back.
Yeah, it's always great to have you on. I wanted to get you on to talk about what's going on in the markets, inflation, our good old friend Jerome Powell, and everything else that's going on. But inflation numbers are coming out around the world, and no matter what country you're looking at, whether it's food inflation in Europe or United States, it's starting to hit people hard, whether it's gas prices and inflation numbers are going up. What's the Fed's next move, Thomas? Are they completely trapped, or what do you think their next move is?
They're still walking that tightrope, and they've been doing it for months, and
Mm,
so far successfully. I think they telegraphed one more rate hike is coming for sure in November, but there could be a second one. So I think the gold silver markets, we might be trapped in a little bit of a range still as we wait for the Fed to finally pause. But I think we're getting to the point where you're about 90% through. So maybe one more rate hike, maybe two. I think it's going to depend on the economy. If the economy starts to show signs of like really cracking, then the Fed's going to be trapped where they can't raise. They might want to raise another time or two, but they won't be able to. The banking system is hanging on by a thread, but the Fed has been pretty sneaky and successful about what they've done. They're doing a bailout program right now. There's no doubt about it. It's a bank bailout in process. What they're doing is they're giving that emergency window open for the banks, and the banks are shifting their bonds that they're way underwater on over to the Fed.
mm,
And of course, then the Fed just prints dollars to buy them, so it's a taxpayer bailout. But they don't want to use the term bailout because that had such a bad connotation, years ago.
right.
But there's no doubt about it. They're bailing them out. And I don't think they can continue to do that forever. The banks are still struggling really bad. And right now it's because of the treasuries. But I think the next shoe to fall, that commercial real estate market is just a disaster right now. Properties are going up on the market for, 50, 60% discount from where they were.
Mm.
Somebody's going to eat that. And it's going to be the bank. And then,
And
then the
uh,
taxpayer.
yeah, absolutely. And we're seeing, I know there's a lot of chit chatter on social media about, all these banks, they're over leveraged, or they just have too much debt on their books and they don't actually have the actual liquidity there on their files or on record. And people were saying, like, what happens like if a bank like Bank America collapses or their stock collapses? And then it does hit the commercial real estate side. What does the Fed do to step in, pause interest rates and collaborate and then take them all the way back down? What do you see? Is that a huge possibility?
They'd have absolutely no choice. They'd have to inject
Mm,
liquidity immediately.
right.
So they'd begin that and probably pretty aggressively at the beginning. They'd have no choice. And the problem you've got then, from an economic point of view, then the dollar tanks at the same time, because the only thing holding the dollar up right now is one, all the other fiat currencies in the world have collapsed.
Right.
Uh, Leaves us as the last one standing. But the other part about it is you run into a problem where if the Fed hikes go away, that's the only support for the dollar. So then the dollar rolls over. If the dollar rolls over, now you've got oil already at 90. A lower dollar, you're going to have oil at 120, 130.
Hmm.
So all of a sudden, the Fed will try to inject liquidity on their own, but at the same time, there's other parts of the economy that are going to be pulling that liquidity back out. The inflation you talked about, I don't think they understand how bad discretionary income is out there in the country right now.
Right.
People have gotten squeezed tighter and tighter. That works for a while, but if any little problem pops up in the meantime, all of a sudden it turns into a big deal.
Hmm.
Uh, I think once we get through this next rate hike or two, I think you're going to see a pretty explosive precious metals market.
Yeah.
The last 36 months, we put a serious base in. And, typically the longer that base goes, the higher the space goes, the old saying.
Mm.
I think by the end of 2020, April of 2024, we're going to see gold somewhere around 2,500. So more than 20% higher than where we're sitting at now. I
And
think a year from then, April of 2025, we're looking at probably 5,000 gold. I think going into the end of 2024, it's going to be absolute chaos here in the United States.
mhm.
You have the presidential election. It's probably going to come down to a couple of votes. It's going to be another one of these 50, 49, 51, 49% deals. you're going to have people. I think if Trump wins, you're going to have chaos. If Trump loses, you're going to have chaos, and all those things are going to be good for the gold market. That's just going to push people to sound money. And at the same time, you're going to have the Federal Reserve sitting there, trying to fight inflation off one hand, but also trying to pump liquidity into the market with the other hand.
Hmm.
So they're on a serious tightrope. I've been looking at some of the numbers. Some of these numbers are staggering. Right now, the U.S. debt, of course, this week broke 33 trillion
Yep.
in debt.
33, yeah.
But the important number is we're now 122% debt to GDP. Now, if you go through your old economics books, anytime debt to GDP rises above 90%, it typically slows your economic growth by 30%. So, if you're growing your economy at 3%, it really, without the debt, it's probably a 4% economy. But the debt's such a lag on it. Right now, 35% of all tax revenue coming in for the United States goes to pay the debt, the interest on the
How
debt.
much? How much is that? What percentage?
But 35%.
That's pretty big. That's
Yeah. And the thing is, when you look at what's going on with our debt right now, the way we're tacking on a couple of trillion every couple of months, that 35% could grow to 50% pretty easily, because the problem you've got right now also is a lot of the debt is going to mature, and we are paying very low interest rates on that debt. Now you roll it out. It's almost setting up a bond ladder. If you had a 10-year bond ladder, you get a small rate of return on the 1 year, but you get a nice return on the 10. And then what happens is when the 1 year matures, you just roll it out to the farthest end of the ladder.
right.
And that's what the Fed does. But the problem is they've got all these bonds now maturing that we're paying, we're very low interest rates. So cheap for the United States. I think the average cost was like 2.7%. But now they're going to have to re-up that. So if you're paying 2.7 and all of a sudden you turn around and maybe you're paying 3.7, that's a massive difference.
Is that happening right now? Is it rolling over right at this moment?
Yeah. Over the next 3 to 6 months, you're going to see a huge amount of treasuries come due.
Interesting.
That's all got to get rolled back in. And if you look at the 10-year note, it's been hanging around 3.4% or somewhere in that area. I think there's a pretty good chance, if this debt all starts rolling in, just looking at supply demand, the prices of the bonds should go down and then the yields should go up. So you could see that approach, 4% or higher.
And you were saying, Thomas, sorry to cut you off at the beginning of the interview, there's a huge possibility, or it was almost a certainty, that the US dollar does get hit and does go lower. And obviously that's going to be favorable to precious metals like gold and silver. But then what would the Fed do? Like, let's say the banking crisis does pop off, it does start affecting commercial real estate, and then they have to pump liquidity real fast money in, and then they would have to pause rates or just lower interest rates immediately. But what would, the US dollar would go down, gold would go up, but then what would the Fed do to save the US dollar? Like, how did they save it?
And that's where all fiat currencies throughout history get into that same trap. You get to the point where you say, okay, we need to pump in liquidity to save the economy, but at the same time, we need to protect the dollar.
Right.
If you don't have that debt sitting on top of you, you can do that. But with the debt sitting there putting pressure on the dollar, it makes it difficult, because you can't spend your way out. If you cut rates, inject liquidity, you're just injecting liquidity, you're printing dollars. So that means your debt goes higher. So that applies even more pressure to your dollar. So I don't see any possible way, if you look over the next 5 years, how the dollar doesn't take a really major correction where you're talking, the index down around even 70. And I've been using that number for a while. I just see a 30% or so correction in the dollar makes sense. I mean, we've sat here over the last year or so and watched our debt go from 26 or 27 trillion now to 33, and yet the price of gold's not higher.
Right.
So
Yeah.
I look at that as a value play now. I mean, the higher the debt goes and gold doesn't move, gold becomes a better and better buy, because that debt's just stacking up. I mean, we're not putting enough emphasis in the United States right now on mining. I looked at some of these numbers today. It's staggering. Right now, the United States is 100% dependent on imports for 12 of our critical minerals.
Yeah, that's insane.
50% dependent on another 31 minerals.
Do they have all the minerals here in there in America?
Most of them, yeah. I mean, I know, for example, the fluorspar mine sat down there in Arizona since 1974. The guy just locked up the place. There was a big fire down there in the town, and the owner got disgusted because the Chinese at the time were dumping cheap fluorspar on the market, and he locked up the place and just walked away. But we have the ability between the United States, Canada, Australia, we could be filling all these mineral needs ourselves. The wealth of minerals up in Canada is unbelievable.
Yeah.
Here in the United States, you go through our Southwest, I mean, Arizona, New Mexico, Nevada, there's a serious potential, up there, for us on the mining side. But you can't have situations like right now, we're moving towards the electric vehicles that are coming. Lithium demand, they expect, will double by 2030. Nickel demand will increase by 3 times by 2030. Copper demand will double by 2035. And just silver demand, just from solar panels alone, will increase by 700% by 2030.
Yeah.
So all these things, you're looking at these and you're saying, okay, clearly that's a sector that's going to explode in demand. The United States should be plowing money into this area, making it right now. If you want to go out and you want to build a refinery, for example, good luck. I mean, you got to go find a place that has an existing permitted refinery and then buy that. Because if you wanted to start your own refinery, it could take you 6 or 7 years just to get the permits.
Is that because of regulations and over government regulations and stuff?
Yes.
Like too many. Yeah,
It-
that's crazy.
Yeah, and I tell you, some of the states have gotten so bad. I don't even do business in some. You go to California right now. I looked at a mine out there. Before you can touch one piece of dirt, you have to pay the state of California. It's around $300,000. They do an environmental study. They bring a whole group of volunteers out, like the Boy Scouts, and they walk your entire property, and they put a flag in every single hole in the ground for an animal hole. And so they track the entire property, and then they'll tell you when you can mine certain areas because the tortoises are laying eggs, or when you start to mine, you have to put up special fencing to make sure the tortoises can't get there. Then there's a green viper snake out there, so you have to pay the state police, set up roadblocks, and then you have to time taking a person to the hospital to make sure they can get there in time.
Yeah.
The green viper snake. But
it's a lot of stuff.
Before you ever mine, and then on top of that, you get to the point where you say, okay, now I got to see if my mine's going to be successul, and then of course, then you run into the California taxes on top of that. Right. So I had to kind of away from that state completely. But in the U.S. down there, Nevada, Arizona, New Mexico, there's great opportunities. I mean, just like this fluorspar mine. This is a generational mine. Once it's back in operation, it'll be up in operation for at least 50 years. And fluorspar, you don't recognize that name in a lot of places, but I mean, Teflon pans.
Teflon, yeah, for sure.
The winter coat with Gore-Tex in them. Teflon is used. They use a lot of fluorspar in the steel making process. So it's got all these things that just happen to involve in our daily lives. That without them, our lives would change dramatically. It's
called fluorspar.
Yeah, fluorspar.
Interesting.
It's just one of our minerals. But I mean, the United States needs to take a real effort at going in and trying to set up a situation where we can do better mining. I mean, right now, if you're down there in the Southwest and I come across, for example, a fluorspar mine, and I go to the owner, I put down contracts, I want to buy it. Maybe the Chinese come in and looked at it at the same time. Well, the Chinese have a state government fund. If they like it, they'll buy it. I got to go raise the funds. I got to get on the phone to private equity guys, venture capital, whoever.
Interesting, yeah.
And I might have to sell a piece of that off in order to raise the funds. The Chinese buyer will just go to the state fund and they'll cut them a check and done. And they've made it so easy for them to go around the world accumulating these minerals and these assets, like the rare earths. See, that's another thing. On the edge of fluorspar mines, you typically find rare earths right on the side of the veins. And the Chinese know that. But we've neglected that area for 20 or 30 years. And now all of a sudden we're going hog wild into this electric vehicle era. And I'm kind of amazed by it. Right now you're seeing the UAW strike. I think they're striking for the wrong reason. They don't understand. I mean, 75% of their jobs might be gone because of these electric vehicles. I mean, if the United States only ends up with 26 or 7% of the global automobile market for electric vehicles, that tells you the big three are going to get sliced down smaller. And the reason it would only be 26 or 27 is we don't have the minerals to build the automobiles. and the Chinese do. So the Chinese can kind of dictate on a global market, okay, we're going to give this much market share to each person.
Or they
I
can
think,
cut, or they can cut supply and
right.
all
So I
over
think
again.
you're going to run into a situation where our big three automakers are going to get really squeezed because they don't understand these electric vehicles, what it really takes to make them. And I think they're going to,
Mm.
I think it's almost a trap they've run themselves into. But yeah, I think overall, the economy's okay right now. It's not horrible, and that's given the Fed a little bit of cover. Where they can kind of at this point keep raising rates slowly, and they haven't
Yeah.
broken anything huge yet.
Yet.
But yeah, that's the thing. They're walking that tightrope. But I don't think they can do it for much longer. I'd say one rate hike for sure in November, and then I think maybe one additional, and that should be it.
Yeah,
And then
absolutely.
2024 ought to be a big year for metals.
Oh yeah, everything. I think elections, metals, everything will be affecting the stock market, war. You never know what's going to pop off in
Yeah.
2024. Well, Thomas, it's been such a huge pleasure having you come down to Wall Street Silver. It's always great. Where can people contact you?
They can contact me, or LinkedIn is probably the easiest place for them to reach me.
Yeah,
Just reach out to me there. That's probably the easiest place to get a hold of me.
awesome. Well, again, it's such a huge pleasure. And as the market develops in the next few months, I'd love to have you back on the channel.
Great. Have a good day.
Yeah, you too. Take care.
All right. Thanks.